Well, hello, everybody. It's Monday, and we are alive, and we are live, and we have Rob from Digital Asset News, friend of the family. For years
Sup,
and years,
Rob?
we've been close, and we got Marty and CTO. Mando is in the air right now as we speak. By the way, before I forget, links below for everybody here, but we're all streaming on our own channels as well, so you can watch us wherever you want. Rob, thank you for coming, man. How are you?
I'm good. I mean, I'm doing good. The market's not doing so great, but yeah, everything else is pretty awesome.
Markets suck. And what did you say to me at the very beginning?
Oh, I said, you talked to and said, yeah, it's going to be great because then the people can, come over here and they can they can not throw so much S stuff at you and Marty. And I said, yeah, that's not true. Everybody's going to come over here and then blame everybody else. So that's what happens in the market. When we're in a bull market, everybody's friends and buddies. The Cardano people get along with the Solana people because everybody's up. But besides that, everybody hates each other. And that's where we're at right now. This is my favorite time because I get to have a good time and accumulate a little bit.
Good attitude as always. CTO, how are you doing, buddy?
I'm doing great. I'm doing great. As always.
Weathering the storm. And Marty, how's the spaces?
I'm doing good. It's nice. Yeah, it's nice and sunny here. Everything's good. I agree with Rob. This is my favorite time. I mean, I know it's contrary to other people's opinion, but this is the best time. Opportunities are knocking. Yeah, it's a tricky market for people. I think it's a self-fulfilling prophecy. You know, once people believe we're going in a bear market, this is usually the vibe. And we'll have to just clarify that and let them know that I don't think we're in a bear market. So I think that's very important for us to explain to them again today.
Yeah.
But I'm good. Everything's good.
Awesome. Well,
excited for Solana Breakpoint. Really excited for Solana Breakpoint. I think once again, it's going to be an incredible roadshow. Lots of news.
Yep. Are you heading over there?
No, I'm not going to go.
Okay. Well, let's get into the story before we get into the charts. I'm going to try and tackle something different, and I'm very interested, Rob, as well, in your perspective on where we are. This one's called the inversion alert, and it's pretty clear that we have had a bear market in altcoins. They've gone nowhere, pretty much flat since January 2022, except Bitcoin has more than doubled. So the theory that I've been talking a lot about, this time is so different. This is from Shinaka. Well, inspired by Shinaka, let's say. You know, we had the all-time high in Bitcoin before the halving, never happened before. We had a price surge driven by ETFs, driven by politics, we never had before. And the question really that I want to get into today is, despite nominal new highs, but if you divide by M2, we basically, the CAGR for Bitcoin over the last 3 or 4 years has been about 11%, which sucks. 14% is a tread water point as far as I'm concerned. But the market has behaved like a bear market in disguise. A lot of, we pumped early, but then we went nowhere, but down. So, Rob, to you first. Definitely, it can be argued over the last 12, 13 months, altcoins have been in a bear market, which actually is a good thing because it means maybe they won't continue, or maybe all altcoins are dead forever. We'll get onto that later. But what do you think about that theory?
I think that, and I think everybody in the comments section can spout off, but does this feel like a bull run? Does this feel like a bull market? Do you feel like, yes, this is exactly where we should be, and to the moon and Valhalla and everything else? I think the sentiment is in the toilet, and for good reason. I mean, people have been getting their teeth kicked in for quite some time, especially the altcoin holders. I'm sorry, that's just how it is. Now, as time goes on, you'll probably be rewarded. But the question is, are you going to be rewarded because you held Fartcoin? Or are you going to be rewarded because you held, say, Ethereum and Solana and Cardano and everything else that might actually do well? So when I take a look at it, I mean, the reduction, it seems like good news doesn't move the price up.
Nope.
That's a bearish indicator. Bad news moves it down even lower. The percentage has dropped from its all-time high from Bitcoin, now 32%. Now I don't know where we're at, maybe 30, maybe 29%. And then alts are lagging massively. And that's even, I mean, we'll get into the macro. You guys are the better at this. But I mean, the quantitative tightening, I mean, we just stopped in December. But for the last 2 years or so, it's been going on. And what has the S&P 500 done? The Mag 7 have flourished. AI has flourished. And right now we are sucking for quite some time. So again, like I look at this and I say, okay, well, QT is ending. But over the last 2 years, we've done pretty well. But right now, S&P is beating us. The M2 global money supply and the M2 US money supply is at or near all-time highs. So it's not like there's like a liquidity issue. Maybe as we move forward and we say, okay, now we're going to do quantitative easing, there's going to be more liquidity. That's great. But when I look at this right now, I'm like, this does not feel like where it is. But maybe Q1, Q2, and the banana zone is coming. I have no idea. A lot of people out there just guessing. I will just accumulate, wait for the bullish to come back, and then we'll do the things.
Yeah, you hit on a couple of interesting points there. One, we'll go to you next, CTO. But yeah, the correlations are all screwed. Correlation with gold, screwed. Correlation with global money, screwed. Well, we do have a couple of aces in the hole. And like you mentioned, Rob, we got rate cuts coming. We got QE in the box. And we know, we've seen many times, once QE happens, Bitcoin just goes up. It's a very good liquidity sniffer. But over the past, we had that again, the all-time high before having with no blow-off tops, no frothiness whatsoever in the market. We had a 4-year red candle in the 4th year of a bull market. That tells you also it's very, very different. And Bitcoin dominance has crushed it, as we saw in the previous chart. CTO, over to you, buddy.
Yeah, it is like, if we're thinking from a fundamental perspective here, nothing makes sense. I mean, if we just go back to 2024, we were kind of worried that the whole industry was getting shut down by the previous administration. It was so hostile, like they were going after everything and everyone with everything they had. And then came a new administration in the United States. We had suddenly a sitting president of the world's most powerful country talking about Bitcoin non-stop. He and his wife did a meme coin, and his 2 sons are shilling like altcoins like there is no tomorrow. And what happened? And then at the same time, all other assets go to the moon. Stocks to the moon. Gold to the moon. Doesn't matter if Bitcoin is speculative or a store of value. It should go to the moon. And what happens? Price is lower than it was a year ago in 2020. That in a way, if thinking about it that way and taking a step back, that doesn't make any sense at all. So is it somehow manipulated, or what is really going on? If looking at the chart as I like to do, you can kind of see signs of what is going on, but I do struggle a little bit to understand why this is really happening. And I love always to hear your perspective, and I don't really know. I can show a chart later as we can see what signs we see and so on. But if staying on this idea, I don't know, how is this possible? How is it possible that Bitcoin is lower now and altcoins are at the same price as they were 4 years ago, or even lower? It is difficult to understand.
Yeah, the manipulation is definitely happening. We've got the manipulation master here, Mr. Marty Party. That's like, if you look at the action just over the past couple of hours, you'll see swing down, swing up, swing down to liquidate the longs, swing up to liquidate the shorts, pull out $250 million in hours. So that game is still going on. And if anybody still gets bled to death by that, that's their fault. They know they're not in control. They're not driving the bus. So watch your leverage levels. But Marty, what do you think of this? One theory I do have, and I've had for a while, is, just like meme coins sucked the oxygen from the room in 2024 or 2023, whatever that was, AI maybe has sucked some of the oxygen from the room in 2025. Marty.
Well, I mean, firstly, it's nice that you guys are coming around. I mean, I've been talking about the manipulation in this market for years, and it was almost seen as a conspiracy theorist. But now everybody seems to have come around. I mean, there's never been more decoupling between fundamentals and price ever. And, I always talk about the closed loops. Understand the blockchain is one closed loop. It's software, it's technology. It's just running on its own. It's decentralized. but the closed loop of the dollar price of crypto over there on the other side is completely centralized, completely opaque. Basically, like I said in this week, centralized exchanges are basically the new tornado cash, right? If value goes into a centralized exchange, you don't know what happens. It's all commingled. It comes out the other side. It's completely the new tornado cash. And I think that's true, never been more true before. There is heavy manipulation going on, has been for a long time. And until they regulate the markets, it will continue. I think that's why you see so much aggression to try and regulate as fast as possible, from Paul Atkins and the Congress, which, I mean, was pushed back because of the government shutdown. But I think that is really the tipping point, is when we restore fundamental value to the actual dollar pricing of crypto. And until then, it's just a massive liquidity extraction, in my opinion. When Trump came in, it became very bullish. Now, on the surface, if you assume the markets are legitimate, then you go, well, the price should go up. Well, they're not. In fact, when the narrative gets bullish, people go long, and so there's more incentive for these manipulators to flush the price and extract that long liquidity, just prey off the long energy. And the other way around, when there's bearish energy, they'll prey on the shorts. And that's just the way it's always been. And I mean, I've been watching this for years, waiting patiently. Now, the good news is we've never been this close to regulatory clarity. Literally within months, we might have finally the same laws from the stock market in crypto, which are anti-wash trading, anti-manipulation, anti-commingling, all of these things, which I believe are going on rampantly like never before, and controlling the price.
But with the offshore nature of these players, are they really impacted by market structure? Will it prevent? Will it clean up the space?
You've got to look at FTX. I mean, FTX was based out of the Bahamas, so that was the same situation. But it didn't take long for the US to use, political push and jurisdictional, power to police the Bahamas. The same thing's true. Binance is based out of the Seychelles, no different. That's just the way it is. There'll be some time, a lag. Once they pass the laws, it'll take some time before we see effect and see some kind of fundamentals return to the market. But until then, it's just the Wild West. And I know it's very frustrating for people, and we've never seen so many liquidations. I believe there's at least $1 trillion has been liquidated out of the retail market over the last 2 years using the scheme. But that's just the way it is. So on the positive sides, personally, I don't fight the Fed. We've been, since COVID, in quantitative tightening. If people don't know what that means, it means that the government, who really control all markets, the Fed, they buy the assets, they buy treasuries, mortgage-backed securities, and stock onto their balance sheet with printed money to create the market as we know it. And then that's how they make money. And when they need to purge that money, burn that money, they do quantitative tightening, and it basically means they're just selling those securities. And they've been doing that since COVID. People don't understand. This is the biggest quantitative tightening exercise in history we've just gone through, and it ended on December 1st. So there will be a lag, obviously, and you can always look at 2019 when this happened before, right? 2019, in August, quantitative tightening ended, and then the repo market blew up, which we've already had prematurely this time around. Rates spiked, and then the Fed announced easing. It was about $60 billion a month. They'd start buying back treasuries in October 2019. And now we've already got reports it's going to be roughly $50 billion a month, starting as early as January 1st. They don't call it QE. Remember, to turn to QE, they need some kind of a catastrophe or something to break. They need a war or COVID or financial crash. And so, they'll probably wait for that. But the stimulus is coming. But before that will be, this repurchasing, building back reserves. And they've told us. They've basically told us. So let's look at what happened last time quantitative ended in 2019, right? Bitcoin went up 200%. Gold went up 18%. NASDAQ went up 25%. S&P went up 20%. I expect the same reaction. I expect the same reaction.
Right before COVID, by the way.
And then COVID came along and blew the whole thing up.
Yeah, right before COVID, there was actually almost a global financial crisis.
Correct.
So you
So
might
the
think
same thing that happened. The
maybe
same.
everything's orchestrated, just like
Yes.
wars sometimes. You know, when economies fail or regions fail, governments turn to war to distract everybody. Rob, what do you think of all of this? Do you believe, number one, market structure will clean up the manipulation in crypto? And number two, the QE that's coming, will that rise all boats?
Sorry. Come on. The manipulation's still going to go on. Just go take a look at JP Morgan, how they manipulate precious metals, spoofing and everything. MicroStrategy, and it goes with that. So like everybody who thinks it, I mean, it's great. It's probably going to be better, but it's not going to go away. And that's what the traditional markets do. They're fantastic and they're masters at it and they've been doing it forever. So even though we get clarity, again, it'll clean some things up, but in the long run, we're still going to have this issue. So I don't see it. And I also see that, you know, the Binances of the world and different exchanges are going to keep doing the things they do, which is liquidate all the shorts and longs. I just do not understand why people love to play that game, shorts, longs, heavy leverage, just to get wiped out and bitch and complain about it on X. I have no sympathy for those people, because I'm like, you've been losing for a long time. And it's not like you are playing against other players. You're playing against the house, and the house is winning. So stop doing it. But
Their
I mean,
house
like,
is bigger than yours. Yeah.
Yeah, but like everybody likes to gamble, right? We all like to gamble, so let them do their thing. And I'll just sit back and just go,
Well, the nasty part about it is that these exchanges prey on the narrative, right? So when there's bullish energy, I mean, since before Trump, there's just been one bullish narrative after the next. I mean, literally never seen so many bullish things for crypto. And so they prey on that. And it's never been worse this year. I mean, they've literally destroyed anybody that, you know, came into crypto running on that narrative with leverage. And those are people that don't have a lot of money trying to make money in crypto. So it's pretty sad at the end of the day, but that's, like you said, that's the way markets work. They're designed to induce maximum pain. And they have. I mean, this has been a max pain year.
Exactly. Let's get back to the story. I'm going to go around the table. I'm going to start with CTO first. Do you believe, because at the beginning you did say that, yeah, this is weird, this is hard to understand, all the crazy action. Do you believe we had a stealth bear market in 2025? We definitely had it for altcoins. And because Bitcoin is having a red fourth-year candle, that's very unusual. Did we have a stealth bear in 2025?
In a way, yes. I mean, at least compared to everything else. Like if we measure Bitcoin in basically any other measure, it backed up, definitely.
Especially gold, horrifying. Lost 40% to gold in a year. That's historic. Yeah.
Peter Schiff is the hero.
and I know, Rob, I know you have a little bit of gold, if I recall. Somewhere.
Yeah, gold and silver. I have it in my Roth IRA. I have physical. And I think it worked out okay. And Peter Schiff deserves his victory lap that he's doing right now. Good for him.
Yeah, he's right. Broken clock is right once every 15 years, as they say. So, but Rob, do you agree we had a stealth bear in 2025?
It depends on like what are we talking about altcoins? I think there's
Bitcoin, altcoins for sure, with the exception of Zcash and maybe Hype and a few others, but the rest have been slaughtered. But Bitcoin had a red candle in the fourth year of the cycle, which also will tell you that the 4-year cycle is broken. It never happened.
It is, but I know people will say like, well, you know, we can't be in a bear market because we didn't have a blow off top or euphoria. And as a reminder, the markets don't owe us anything. So, I mean, from the base, November 9th, 2022 to October 6th, 2025, that's a clean 8x from what Bitcoin did. So, like to say like we're in a bear market. I mean, 2025 for sure. I think we're on the negative, aren't we, for the last 365 days?
Oh yeah.
So, but it is a thing to remember that in this bear market, we also hit an all-time high, not more than 45, 60 days ago. So in that regard, it's very sticky. It's a very difficult situation. And I have to say that if it wasn't for the 1010 crash that was happened because of Binance and their different pricing procedures and how everybody got liquidated, I don't know where we'd be right now. But I can tell you that, again, with all that liquidity sloshing around, it seemed like it didn't find us. It found gold and it found equities and even real estate. So
Yeah.
to say it, I would just say like, yeah, it feels like a bear market, but we've had all-time highs. I'm just more concerned about what's going to happen 2026 moving forward.
And remember, when we say equities, we're talking about 7 of them, not 493, the other 493, because that's been a big part of it. Marty, yes or no question. Did we have a stealth bear in 2025 that caught everybody by surprise?
Yeah, I think we've had a bear market since COVID, personally.
Well, since 2022, then, after the big COVID
Bitcoin
hit.
rallied because of institutional debt. I mean, they had access to liquidity. Retail has never been broker. I mean, people can't afford anything, let alone crypto. So they've had to actually sell, because crypto is the closest liquidity. It's the fastest liquidity. It's basically real liquidity. It gets sold first. People have needs. And so it reacts. It's kind of like the canary in the coal mine.
That's exactly the point.
Telling us exactly what the liquidity situation is.
I get those questions a lot. People need to make ends meet over the Christmas period for kids and presents and travel and all that stuff. And it's a very hard time out there. Have you guys seen, has anybody noticed the people posting their receipts for burgers and fries on X lately? Like $70 for a couple of burgers and French fries
from Five Guys. Yeah.
Yeah, you saw that.
I saw it. I was blown away. It was that one. There's another fast food place. Prices are crazy these days. And
I just think the good news is that we need to just focus on 2026, and that is that we'll have the largest probably stimulus in history.
Well, let's talk about 2026.
Crypto will get more allocation than it did last time. So
you just jumped on that grenade. Marty, 2026. Are we going to get the action that we deserve in 2026, considering the macro? Because the macro is all pointing in the right direction. That's why I still have hope.
I only work on macro because I think macro. I mean, first of all, you misunderstand that when you talk about the market and I tell you it's manipulated, then the price of crypto does not reflect the price of crypto. It reflects the price of Binance required to liquidate longs and shorts. So it's very hard to know what the real price of Bitcoin is. What is the production cost? What is the OTC cost? What is MicroStrategy paying really at the end of the day? Anyway, I think when the Fed starts to increase the balance sheet starting in January 1st, every week they will start to purchase securities. I think there'll be a large banking cheap money explosion, and I think people will start to buy crypto again for the first time. I think retail's only been selling. I don't think they've been buying. And so I think the first 3 months of 2026 will be a complete turnaround. That's my opinion.
You sound like Tom Lee.
Yeah, I think by June we'll be back at where we were. That's my opinion. Yep.
Yeah, definitely. I see a lot of angles like getting back to 115, 120 pretty easily, and it can move very fast. You just need, I have another theory as well, which might be controversial. I think waiting for retail to move the Bitcoin needle is never going to happen because it's too big an asset. It's 2 trillion, give or take, depending on the day. It's completely controlled by the ETFs right now, and the DATs have been destroyed. So the treasuries aren't buying, with the exception of one made a huge buy today. We'll talk about that later. But Rob, do retail have any power left in this market, or is it all ETFs and institutional right now?
I mean, we have power. We have some power, but it's not like, when you have the sovereign wealth funds and the ETFs and the institutions, the hedge funds, and they're piling in or piling out, as we've seen some pretty big outflows, what's retail going to do? And, as time, I've been in since 2017, and it's a sad situation of where we're at right now. I mean, Bitcoin was supposed to be a peer-to-peer transaction. That's what was written in the white paper. Now it becomes gold 2.0. Now it becomes a store of value. And that's debatable even there if you're talking about short-term versus long-term. But I take a look at it and I just think to myself, where did we go wrong? I mean, we should have rallied around it, and we shouldn't have been buddying up to all these different banks. I like what Jim Bianco said.
But aren't you just saying that because the price makes the narrative? Once again, that's just narrative.
Right.
Just because the price went down. If the price was at 134, you'd be saying, oh, it's the greatest store of value of all time.
Yeah, well, it didn't. So here we are. And then also...
Yeah, but the price is manipulated. So you see the problem.
Marty,
the narrative comes from the price.
Marty, I see the problem. But the problem is when you're retail and you're looking at this as a store of value and you're going there for like, okay, my store of value just tanked 30% over so many months, and I just have to pay for my mortgage. I have to pay for my taxes. I have to pay for this. It's a shitty store of value right now. Now, for short term, it's bad. For a long-term store of value, it's good. So there's a difference, and it's all about who we're talking about. We're talking about retail, we're talking about institutions, sovereign wealth funds, hedge funds, which one? So to me, that's just how I see it.
Yeah, and we were also seeing a trend, CTO to you, that when Bitcoin was very small, nobody cared. Now it's 2 trillion, and everybody knows once something hits 2 trillion, it becomes a real asset forever. It doesn't disappear off the face of the planet. And now Wall Street have woken up, and it's like, we need to get some of this thing because it looks like it's here to stay. So we've seen big moves by JP Morgan, by Bank of America, by Goldman Sachs, by you name it. Of course, BlackRock is in there big time. Their most profitable, most revenue generating ETF ever is IBIT. Who saw that on their bingo cards? But what do you think, CTO, about TradFi coming in now, and they want to own the place, hence the manipulation, hedge funds? Maybe there's some collusion behind the scenes between the Morgan Stanleys and the JP Morgans and the Goldman Sachs to get this property fast.
Yeah, of course, they came in late, and that cannot be good. Like thinking their strategy meeting, say that they sat there and say that, okay, guys, we were wrong. We should have gotten in on the Bitcoin thing. We didn't.
Yeah.
And now it's $100,000 for each freaking Bitcoin. That's not good. So, of course, then they're struggling what to do. Could that be a factor? Perhaps. At the same time, they didn't have enough to sell the price down substantially. So I think they do struggle a little bit what to do here in this situation. At the same time, I don't think it's Wall Street that has sold price down, something like that. I don't think so. I think they would have liked to do it, but they didn't have the Bitcoin to sell it in the first place. So, and they don't have any other method to do it either. I think they're a little confused what to do. They would love Bitcoin to dump first, right? I mean, these guys are taking a 5-10 year perspective. They would love it to go down.
Yeah.
Now and then turn around, rather than going in a straight line up, I think.
And remember, 3 years ago we were 15,500.
Yeah,
but we'll never get down that low again ever, because and Rob, I'm interested in your perspective and the people you talk to. You, like me, know a lot of people with, say, a lot of money, and they've missed it entirely. And then they ping you and say, hey, is now a good price? Or should I wait for 70K? Or should I wait for 50K? Or should I just bite the bullet and buy now? I know I need some of this thing. Bank of America says you need to be 4% allocated to Bitcoin. Are you hearing those stories? And this is the reason I care about this, is because if there is this kind of medium net worth, high net worth buying pressure coming in from retail at a certain level, say 70K, that means that's the floor, which is also the price at the election.
Yeah, no, people still, when they talk to me, especially in Puerto Rico, they just pretty much talk to me about what they're more comfortable with, whether that be precious metals or if that be real estate. That's pretty much what they garner around. They know I'm, more of a crypto person, so they ask me, but I just tell them, the worst time to buy is never. So you need to at some point get on it. And look, it works out pretty well for Michael Saylor at Strategy. I mean, they just bought $1 billion worth of Bitcoin today, or
over 10,000, yeah.
So, I mean, for me, I just, again, like you can, and people will always look at it and go, well, you should have bought down here, or you should have bought at this point. But so far, I think it's doing just fine for Michael. But for me, I don't get a lot of people talking about it because it's on an all-time high, and I think they're more concerned about price dips than I am.
Interesting. And that's the big buy that Michael Saylor just made, actually.
That's a big one, eh?
Oh, huge. And that goes back to the banks, what we discussed earlier. Banks versus Wall Street battle. You can see the breadcrumbs that there was something funky going on. You got all these big players now aligning in different groups. You've got the president has meetings with Michael Saylor and Lutnick and all these big players in government. You now have Cantor Fitzgerald very much behind all things Bitcoin, all things Saylor. In fact, Cantor Fitzgerald have $1.5 billion worth of MicroStrategy. Charles Schwab, also a new ally for MicroStrategy. But the JP Morgans and the Citis and the Goldmans, they don't like being late. That's very painful for them. And then MNAV, I mean, Bitcoin, if you want to buy a Bitcoin with MicroStrategy shares, it's $77,000 now. And the price of Bitcoin is what? We'll pull up a chart from CTO in a minute. But anyway, that's the big thing. The MNAV is down. But what is interesting about what Saylor has done at the beginning of the year, he promised a 25% yield, which means you have 25% more Satoshis per share than you did at the beginning of the year. And that is a very interesting strategy. That's been the whole thing that's fascinated me from the very beginning. And they now hold 2/3 Bitcoin. Nobody can catch them. A lot of treasuries say they could, but they can't. But let's go to you right now, CTO, and let's see what's happening in the chart world. Anything fun, good, positive? Any signs
Absolutely.
of hope? You can see the channel going up.
I will share both the good and the ugly picture, and we'll discuss. So from a short-term practical perspective, this is what I do practically. It has nothing to do with my beliefs about the long-term success of Bitcoin, which I have no doubts about. But the trend turned down in October, guys, over at 108,000. After we had a very ugly rejection head fake here just before the big 10th of October liquidation. And it hasn't, we cannot, there's no signs here that we can say that this has confidently turned around. In fact, after a big move down, when it bounces around like this, call that a bear flag. And it's not a good one when there is this flag pattern in the opposite direction of the move, because more than 50% it continues in this direction. That's not a certainty though, but from a practical risk mitigation perspective, I'm looking at this time frame. But if we zoom out and look at multi-year view, the picture changes quite a bit. It could be that this is what we're seeing. This is then from 2021, 2022, 23. Here was, we had the bottom here in late 2022, early 2023.
November 22, yeah.
Exactly, and we went up. And if you know anything about technical analysis, you probably know the inverse head and shoulder pattern. So, and that's what we have here on a multi-year horizon. And with this lens, if you will, this dump here is just a second retest of the same neckline.
But it's a higher low too.
Exactly. It's a high low, and this neckline is sloping slightly upwards, which is good. And with this viewpoint then, it could be that the second retest is it, and this was just some consolidation, perhaps, like you said, James, because a lot of money was sucked out from this ecosystem into AI. Perhaps it comes back and we blast off from here. So the trick here is to try to be able to keep two scenarios in the head at the same time, and then try to swing in the direction that it seems to be going in. And that's what I try to do. From a short-term perspective, this is not good. We don't have really the confirmation yet that this has turned around, but it could very well be that it has. And no one would love more than me if, Martis, your prediction here that the bottom is in turns out correct and we start moving up from here. I'm not stressed about it. If it does, we're not going to miss it. It's not going to go to 1 million tomorrow in that case. It will be a turnaround where the strength gradually comes back. So this is what I'm looking at. Short-term perspective, we cannot say yet that it has confidently turned around. In fact, it's a bear flag. But if it continues gaining strength here, it could very well be. And I will try to play the scenario that actually plays out from this. If this confirms on the downside, is not good, guys, then we're probably heading quite a bit lower.
And on the 26th of November, I was trying to figure out: are we having a dead cat bounce, or is this for real? Is this a real recovery? And I looked at 37 different indicators on chain, etc. 19 were bullish. I think 8 were bearish. 10 were neutral. And that's a net score of plus 11. So basically 60% chance that it was, not a dead cat bounce, but more of a bottom was in and we go up from here. And then looking forward to December and into January, we've got the rate cuts, we got QE happening. So there's a lot of tailwinds. Are we being overly bullish, Marty? Does that bear flag concern you that CTO just showed?
Yeah, I don't really see it like that. I mean, I think it's a Wyckoff once again. They've just gone from reaccumulation to reaccumulation, and this was our first distribution. So we're now in a new accumulation Wyckoff, which starts with a markdown. We just saw the markdown. And then, it bubbles around here, testing the low. It's just picture perfect Wyckoff right now. I would expect it to test the low at least twice more before the spring. And the spring will probably be underneath the previous low. And that'll be the beginning of the next bull market. I don't see anything else. So we're in phase A right now. We're just coming into phase B of the accumulation. If you just look at any Wyckoff method schematic for an accumulation, you'll see pretty much what's going on. And as we go along in the weeks now, I'll map it again, obviously, the way I do, and we'll see how it does. But I would still expect a spring, which is basically to go and remove all of the longs gathered during this accumulation phase down at the bottom here. And I think it's just the banks, like you guys said. I think it's the major banks who fought and resisted and finally caved. Expect, banks, institutions don't buy the top. They expect discount. When you're buying with size, you get a discount. So I think on the OTC market, this is the discount. It's around 90,000. And it'll probably come down to flush those longs during this accumulation, probably diving underneath 80 one more time before, and that'll be the spring. And then we'll go up from there through the LPS and the SOS again. That's my opinion. When that'll be, nobody knows. I think we just got to align with the Federal Reserve and say it's probably going to be around the end of Q1 of next year. We'll probably see this go on until then. This sideways action, slightly higher high, slightly lower low, absolute maximum extraction. So shaking out as many people as they can, accumulating as much as they can around this $90,000 price, which is, according to JP Morgan's people, the cost of production on average around the world. It's between 90 and 94,000.
Exactly, and that's normally a good floor. In fact,
right.
this guy, we mentioned it briefly, but MicroStrategy bought over 10,600 Bitcoin, which is an extremely large buy. And he probably did it by raising money through STRC, because that's his preferred dividend that pays now 10.75% per year. And they've allocated $1.6 billion to pay those dividends for the next year and 2 years or something. So this is kind of getting a lot of people's attention. And we know that MicroStrategy does well when Bitcoin price is above 100 grand. When it's below, it's not. Their average price now, I think they bought all this Bitcoin, by the way, for $90,000. That was their lowest DCA in probably a year. So it was, for the first time, they got the DCA on steroids right, which is good news. But let's switch gears now. By the way, a lot of people are saying sometimes it's their only on-ramp to Bitcoin or the only one they feel comfortable with. And the NAV premium discount's 15%. Would you nibble here on MicroStrategy, Rob? That's what people want to know. What would Rob do?
This is not my wheelhouse. MicroStrategy, that's for you guys to answer. I don't dabble in this. I have a little bit, but this is not my thing.
Yeah. CTO, 15% off? Buying through a property?
I'm a little bit confused because there are two ways to measure it, right? And the strategy tracker actually says 1.01x. I have studied it. I understand it that's only the Bitcoin portion, while they have some other assets as well. And that's why it's 15% premium. the way strategy reports it, while 1.01x, and it was actually down to 0.95x about 10 days ago, right? James, can you clarify this once and for all for me and everyone?
Yeah, there's a very difficult way to do it, a medium way to do it, and an easy way to do it. I recommend everybody do it the easy way, and that is look at the market cap of MicroStrategy. Take the market cap, divide by the stock price. That gives you the number of shares. And then you can calculate, based on the number of Bitcoin, the Satoshis per share. You can also look at the number of Bitcoin, multiply by the live Bitcoin price, and compare that to the market cap. And that gives you your actual status of where you are. Then you can take into account all the debt that they have due going out 3 years, 5 years, and all that type of stuff. That's another way you can do it. But the simple way is just look at the market cap and look at the price of Bitcoin times the number of Bitcoin they have, and then calculate the discount. That's the simplest, easiest way by far. And it's very rare, by the way, that it trades at a discount on that metric. So the one thing I do recommend for people to do is measure it consistently. That's the most important thing. And be careful when you look at other sites, because there's many different ways. You could look at outstanding shares, you could look at shares in circulation, all that type of stuff. It gets really messy. But that is the MicroStrategy story. Let's talk about altcoins, because a lot of people are very frustrated. We have a Solana t-shirt wearer in the audience right now. Normally, historically, before breakpoint, there is a Solana rally, and Solana is deviating from the other names right now today and yesterday. But all season, will we get something that resembles one in 2026? That's the billion-dollar question. Rob, to you first, and then Marty second.
Sure, why not? I don't know. Everybody's guessing. I
$3 Cardano. Come on, give it to me.
Well, of course Cardano is going to be awesome. Everybody knows this in the chat, and of course these guys here, they're all just playing a game. They're all big, huge supporters. But yeah, I mean, like to say like the altcoin season is going to come. Everybody who's called an alt season so far has been 100% wrong. So I'm going to say, who knows? Everybody's guessing.
Yeah, it's tough. But when I look at what certain chains are doing fundamentally, it's incredible. They're reinventing the world. And Marty, you know what the head of the SEC said about within 2 years, what is everything going to be? Everything's going to be tokenized.
Yeah, I'm a technology guy. I don't really, I'm not into speculation. Fundamentally, there is only one network that can support the scale of tokenizing the world, and that's Solana. They're so far ahead. And, you know, once again, the people look at the price over the chasm, the two closed loops. The price of Solana is highly, highly manipulated. Because Binance has a long-standing hatred of SPF and Solana. There's a lot going on there, as well as the FTX bankruptcy and paying all the creditors using Solana. But that ends shortly. When that ends, I believe Solana will reach fundamental value, which will be a magnitude higher. I look at the technology. There is only one technology really that can do this, and that's Solana. They're just about to have breakpoint. The new things on Solana are just mind-blowing. Obviously, the new approval to reduce the inflation will be good. The release of Alpenglow will be good, et cetera, et cetera. And Firedancer has a major announcement. They're probably going to go live. So Solana to me, and if you look at the net flows into the ETFs, I mean, I just got the report now. It's over 7 days, minus 1,400 Bitcoin, minus 24,000 Ethereum, plus 470,000 Solana. So Solana ETFs have had only positive inflows. I think it is the truest tech stock of all the crypto networks. It's the new Linux. And I think smart investors know that, and they're accumulating.
And winners take most. You know, Paul Atkins, the reason I care about this is that everything will be tokenized on the stock market within 2 years. Larry Fink said the same thing.
Yeah.
These two people know what's going on. And by the way, we have a lot of people now that they're only on-ramp. If you're in an emerging market and you need to buy some Tesla, you're buying Teslax. Okay.
Correct.
You're buying NVDAX. and then you can do some very creative things as well. Now they have the ability to play kind of like you can almost perp NASDAQ stocks using tokenized assets, and it's all happening on Solana. The winner takes most. The winner in this case is taking everything. But would you recommend it? I know there are some risks to this. There's some slippage risks. There's some spread risks. Are you really buying the underlying asset? CTO, what do you think about people, especially those that don't have a centralized brokerage to buy stocks and they're buying tokenized stocks? Do you think they're taking on too much risk?
Of course, there is a risk. I think that Larry Fink and all these people, everything's going to be tokenized, guys. If you haven't, I didn't know this. But I have like a tool. So I'm pulling price data from the crypto side and from the stocks side. And every single time there is a problem, every single time, 100 times out of 100, it's always from the stocks side. It's like some data from some exchange that's not coming, or there's some splits or something. And I'm sitting 6 a.m. here. This morning. I sat at 6 a.m. in my boxers trying to fix it. And it's always a stock. Always is the stocks. Well, crypto just works 24/7, 365 days. It's software. It just works. While the stocks is like these ancient systems that's different in every country and everything, and it's like just a big mess. And of course, Larry Fink and all these people are sitting with it on a much massive scale, like every day, pulling their hair and seeing this. What if we could put this on this software instead? And this just works. Imagine like the cost saving is like a factor 1,000, maybe a factor 10,000 for these guys. They don't even need to run the blockchain. Someone else runs it and it just works. So this is going to happen, guys. And I think it's a massive investment opportunity that hasn't been realized yet, because this has not come yet. Now we have like 10 stocks that we can realistically trade, and there could be some counterparty risk. We don't really know what's going on, but it's going to come, guys. The cost saving is absolutely enormous. So it's going to happen, 100% sure. And I think what we can do here is to try to figure out how can we capitalize on that. What are the tools that will be utilized? Perhaps the blockchain, Solana, or which one it is. Perhaps perp platforms that Mando highlighted the other day would be a big winner here, because if you have perps automatically on all these ones, maybe it's easier to trade them there than go and buy the stocks, right?
Oh, yeah.
So they could be the winners. And I think what we are kind of early on this insight still, and I think that this could be a massive sector where we can make huge wins. I mean, of course, now, right, if you buy this derivative, that you do take on another counterparty risk, which you don't do if you just buy the stock. But over time, this will be sorted out, and I think it will be a huge winner.
I think it's important, James, to understand too. There's many kinds of tokenized stock, right? There's like X stocks, which just track the actual price. They're just basically a derivative that tracks the price. Actual tokenized stock like Galaxy. Galaxy, actually, their tokenized stock on Solana is the actual stock. It's not just some kind of synthetic wrapper. So you have all the full legal and economic rights, voting, dividends, everything. That's through Superstate on Solana. And that I think is, once market structure is passed and in play, and Paul Atkins had said this, companies will have the option to IPO as Solana tokens. And I think once you get that new momentum, I think the sky's the limit. As far
I'm glad you mentioned that, Marty, as well, because it proved the model, it proved the plumbing works to throw Galaxy onto the blockchain. But one of my dreams, it's a perverse dream, but it's to be able to perp pre-IPO stocks, both long and short.
You can do that. There's a thing called pre-stocks. You can do that.
Oh yeah, but they're very shady. I mean, in terms of their price tracking, I've checked them out, but they're not quite there yet. But Rob, what do you think of this wild future tokenization and pre-IPO access?
I mean, all those points were excellent, but I'll just go the other side. Is that I think the killer app is payments. And I was talking to head of payments over at Tangem, and they were talking about the intermediaries between Visa, Stripe, and everybody else. You know, a small business or anywhere where we actually make payments, they're going to pay between 1 to 2.99% plus 30 cents per transaction fee. If they go into the crypto state, all those intermediaries go away. I always thought it was Visa and Stripe were the real enemies, but it's not. It's the people that it touches and all those different payment routes to get to the actual small business owner and in between the person. So they said, if we can do that, that's trillions of dollars right there saved. I thought that would be the next big thing. And if you want to see like where payments are going, just take a look at Visa onchainanalytics.com. It's from Visa. They're tracking all the different stable coins as far as the big chains. And the big four are the best, as I call them. The best are Binance, Ethereum, Solana, and Tron. I know people say Tron, that's ridiculous. But if you're in Southeast Asia or any Asian country, trust me, you're using Tron.
Yep. It's all Tron. All right. Another quick question that people are concerned about. People, this is kind of tangential to the AI revolution that's coming. People are worried they don't have enough assets, but they do have some assets, and they're thinking about a rotation. And it's good that you're here, Rob, because you're like me. You also like real estate.
I do.
A lot of people are concerned. Should they find a way to build an AI bag or even a crypto bag by selling a portion of their real estate or selling their house and moving into a rental? And there's pros and cons, of course, selling. We know that hard assets and AI will outperform real estate, but you need a place to live. Also, your real estate can be a big tax write-off. It can generate perpetual income. Maintenance is a pain in the butt, but and there's taxes if you sell. What do you think to people who are considering this direction, Rob, ditching your real estate to buy AI or crypto?
Well, I mean, like it's everybody's like what they're into or what they should be doing. Like if you're a young person and you bought a house and you're 25 and you want to travel, why the hell you got a house? You should get rid of that house. You should do someone else. But if you're like moving into it a little more stability, you got a family to raise, you got people, you got kids coming up, why are you selling your house? So it all really comes down to where you want to be. I believe in diversification. So real estate is a pretty big piece. And then also I like it because there is cash flow. The problem is, and James pointed out too, if you are buying a house, you got maintenance and that's a big cost. You got taxes and that sucks too. Yeah. And if you're in the United States, you're paying from the nose. So that is a problem. Although I will say, I had on Mark Kohler, who's a CPA and also a lawyer, and he talked about when crypto people take gains, and he said he does this in his firm. You know that because of the big, beautiful bill that passed, you can take those gains, you can take those profits, and you can roll it into real estate, and it can be a tax deduction. But there's a difference between the land that you buy and the property that you build on top of the land. The property that you build, you can take that against your taxes, and you can deduct that from your gains. And they said, why wouldn't you do that if you're taking gains from crypto and you don't want to keep it in a melting ice cube that's cash? If you can stick it into, I don't know, short-term rental type of property and then get cash flow from that and you get the tax benefits, why wouldn't you do that? I thought to myself, I was like, damn, that is true. So there's options. Again, this is where you live and where you want to do. If you're an American, this works out. If you're in Europe, sorry. So that's what I think.
Europe, I sometimes I watch these YouTube videos about people buying these beautiful chateaus in France and Italy for like peanuts, and I'm like, wow, incredible. Marty,
yes.
What do you think of this pivoting from real estate into AI and crypto? Madness or good idea?
I mean, I agree with the last statement. I think everyone is a different trader. Everyone is a different investor, depending on your age, your timeline, and your personal situation. There is no one choice. I think if you're an older person and you're looking to retire and enjoy your best life, your exit is sooner than later. But once again, I always go to my original thesis. I believe that there is no way out of the US debt other than repricing assets. And they're probably going to do what they did in the 30s, which is gold. And now they have Bitcoin. And they can seize every asset except physical gold and self-custody crypto. They can seize real estate. They can seize stock. They can seize paper gold. I think that's what's happening. So I don't believe in real estate right now. I think real estate is hugely overvalued since COVID. Same as the stock market. They feel like highs to me. I wouldn't do it. I mean, I sold my house 2 years ago, trying to sell the top. I don't think moving from, look, if you need a house, you need a house. I agree with that argument. If you have a family, you need a house. So you have a different criteria. But if you're sitting in real estate right now thinking, should you sell it into crypto? Real estate is at a top, crypto is at a bottom. I think yes.
Actually, I disagree with you there. With rates coming down, real estate will go up.
Good idea. I can't see that not being a good idea.
Yeah, and also as QE happens, real estate goes up. As money supply goes up, real estate goes up. Real
But
estate's hard.
like you said, don't go all
Yeah.
in, guys. The all
Oh, no.
in is the problem. This is the
Exactly.
DCA podcast, not the all in podcast. Okay,
Exactly.
very clear. We are
See,
hedgers. We believe in diversification. Go ahead.
Yeah.
Yeah, I think you can maybe just add one perspective. I have this feeling that people might live in different places with the increased digitalization. I mean, a reason that you can buy this chateau in Italy or France for peanuts, like a few 100,000 or something like that, or you can spend a million and you get basically a castle with a moat around it, like in the movies, is that no one wants to live in those areas, so they can't sell the properties. While when it was an agricultural society, that was like the center point, and the owner of the whole village and the land lived there in the castle, and directed all the farmers, and the whole life was around the castle and the village and the church and so on. Then everyone left. They wanted to go to Paris or Milan or something like that. There's no one left. No one wants to buy that chateau anymore, because it's kind of in the middle of nowhere suddenly. And I feel that could happen again. Today, a lot of people live in some medium-sized city that they don't really like, but they have to live there because the office that they go to is there. So they have to live there. They have to buy a house that they don't really like, but it's the best available in that city. That might change. I'm feeling if we're anyway working remote, perhaps people will move out of that city. They want to move somewhere like where Rob is living, or James, where you are. They want to go somewhere else, perhaps closer to water or beautiful nature or some other factor, or they want to live in the nicest city where there is nightlife or something like that. So I feel that it's important to recognize that this might change, and the same thing that happened to the chateaus, I think, could happen again. That a lot of properties that are pretty valuable today become almost unsellable because everyone wants to go to other places now that we work more digitally. So I think some real estate might go up a lot, and some other real estate might also drop a lot.
So well said. We're seeing signs of that actually in the United States. A lot of younger people can't afford their first home. But the future of work is gig economy, not full-time wage slave for 20 years, but bouncing around from position to position, especially with AI. There's a lot more entrepreneurialism happening. And with that comes a lot of flexibility. And young people are much more nomadic than perhaps we were. They want to, I want to spend 4 months in the summer in Italy, and then I want to go skiing in Aspen in winter, and I'm going to go surf with Rob in Puerto Rico in spring when the waves are big, something like that. I don't know. But that's a big part of what's happening in the world too, which is interesting. All right, last unless you have something to add, Rob, we'll go to our last topic. This is everybody hears, AI is deflationary. Won't talk about Tesla price targets, but they are the Tesla price targets. Everybody's also asking, is it too late to buy Tesla now? We'll get to that another time. But deflation and the impact on Bitcoin, as we go into this AI world, it is becoming very deflationary. I was stunned in Costco the other day. I could see TVs, really good 50-inch TVs for $200. I'm like, what? And they have Dolby surround sound and smart TV. Like, how do they even do that? But this is the deflation that we're going to see. And with deflation, in sustained deflation, when we look at history, you can see what gold did in the 1930s. Bitcoin is poised to thrive. So the AI revolution is bringing around deflationary forces, which will help Bitcoin because of its scarcity, etc. He or she who owns the hardest assets win, which includes real estate too. But let's go around the horn real quick. Marty, deflationary forces impact on Bitcoin. What is your take?
Yeah, I think AI will be the biggest driver of deflation. Kathy Woods has been saying that forever. And we're seeing it in real life. I mean, the incredible automation just drops prices. I think it's good for Bitcoin. I agree with you. I think everything's good for Bitcoin. I can't see anything bad for Bitcoin. The price of Bitcoin is a different thing. It's not coupled, but until it is. But Bitcoin, the actual technology, I think benefits greatly from AI. Remember that a lot of Bitcoin's value came and its hash rate came from the same energy in computer science that was from AI. The incredible evolution of the chips and of the technology was pushed by mining, pushed by the technology revolution. In the same way AI, they all benefit from the same energy. So they're much the same, as well as the currency of AI will be crypto, right?
Yep.
Crypto is in fact the only thing AI can't possibly crack.
Yeah, when you're printing trillions of tokens per day, crypto is the only thing that can keep up.
Right. So
as a payment
whether there's
mechanism.
inflation or not continuing, I agree. I think there will be. I think there will be deflation.
Yeah. But
from
by
AI.
the way, good. Thank
And
you
I
for
think
that,
it's
Marty. I want to mention a piece of history because
Go ahead.
5 years ago, I set up a collaboration called DCA, and that was with George from Cryptos Are Us,
Oh, yeah, that's right.
myself, and Rob. And DCA doesn't mean dollar cost average. It means digital from Digital Asset News, crypto, which is Cryptos Are Us, and answers me.
That's
That was the
crazy. I didn't know
DCA.
that.
Yeah, that was 5 years ago, and this guy
Oh,
here, we're
fine.
together again.
We're all George. We're all
Yeah.
George.
Exactly. So I just wanted to, somebody remembered it and popped it up, so I thought it was worth saying. Deflationary forces, CTO, on Bitcoin. Does it make hard things get harder?
Yeah, I do think, because I mean the main idea is that some things will get incredibly cheaper and some other things will get more expensive in those terms. And yeah, I think it can happen, absolutely. AI is going to be massive in so many ways. Things that are super expensive today will be almost free. And yeah, it's such a big topic, but yeah, I think you're right. Some assets which AI can't copy will probably raise in value, especially compared to the other things that get enormously much cheaper.
Exactly. And that's kind of why I always stress in the age of AI that asset allocation is no longer optional. It's survival, because AI will accelerate everything. And unfortunately, extreme inequality, which is very bad for the average person. But if you hold assets, hard assets, you can protect yourself, because in the world of abundance, there's a very few things that are scarce, and there are things that cannot be replicated. Rob, what's your take, big picture, on AI, our final word, final topic, and hardness and abundance, and what does it mean for Bitcoin and hard assets like real estate, etc.?
Sure. AI is the Cialis for assets. It makes hard assets get harder.
There you go.
So like with this one, you can see that I think AI will do pretty well. But the thing I worry about with AI is what Elon Musk said in an interview. And he said, you know, it's work and the things that we do to accumulate money can be done. But I think he said in the future, and this is like 2 to 4 years, that people will only do it if they want to. Just like people who plant vegetables in their backyard. You don't need to do that. You can do it. It's the same thing with work. So I think to myself, well, if work is going to go out the way and we're going to be on UBI, helicopter money for everything, how does that separate all the people? And the only way to separate the people is not because of the work that you have or the money that you have. It's going to have to be the assets that you have. And the assets that you have to be the hardest ones that are out there. And Bitcoin being the hardest, also land and real estate and gold would be those also ones. Why wouldn't I be accumulating them right now? I don't know what's going to happen with AI. It scares the hell out of me, though.
Exactly. And Rob, somebody just said, I don't know anything. It's so funny because you are the best at dealing with trolls. I've learned so much from you. So I shut up that thing. It's like, yeah, if I don't know anything, then I'm an incredibly lucky person. So just,
I mean, another point is that is Jevons paradox, right? AI accelerates Jevons paradox.
Exactly.
So it makes Bitcoin mining more cheaper, more abundant, makes decentralization better, hash power, all those things. It strengthens the network security, AI, right now.
Yeah.
And also central banks hate deflation because, they can't print more money, debt burdens become heavier. So that's another reason why Bitcoin will shine.
And that's already spiraling.
Banks hate deflation. AI makes deflation.
U.S. debt heading towards $38 trillion. If you have a visual of how much $38 trillion is, it'll melt your head. It's
Oh,
completely
God.
crazy. But we're now in the world, and to hammer on what you said, Rob, we're in a world where intelligence, people say, I don't know poop. Yeah, right. But intelligence, the value of intelligence is going to zero. Okay. So you don't need to know anything in this future world. And CTO, I know you think about your era digitalis all the time.
Oh yeah.
Nobody understands the impact of that. You know,
It
we
will
used
be,
to have
the impact is much bigger. No one gets. I think we don't really get how big the change this is either. But it is like from agriculture to industrialization, or even bigger. The value of being a great farmer dropped because everyone moved to the cities and started doing business instead. You know, and I think it's the same thing here. The value of being a great lawyer, or a great analyst of different cancer images or something like that. The value of that was here. You live in the nicest house, you drive the nicest car, and so on, and suddenly it is worth almost nothing. But what AI can't copy is assets.
Yes.
That's what AI can't copy. The most obvious form of asset, and maybe the easiest one, is financial assets, right? So that is, if you don't show up every day and try to accumulate assets one way or another, or at least try to learn how to accumulate assets, you're probably doing a mistake right now, because most other things has a very uncertain future. Like I always joke that it's like plumber and barista that is safe, but I just walked by and like a robot barista and like in a shop yesterday, so maybe that wasn't safe either. But jokes aside, like these kind of everything that you do in front of the computer that tends to pay really well today, it's very uncertain, guys. You have to build assets. AI can't copy assets, and that's what you have to build. And then what will happen with society, like, because some people will do it. Those of you who is watching here, we're at least trying, right? Most people are not even trying, so they're not going to succeed. Like if you don't shoot the ball at the goal, you're not going to hit the goal. So most people are not even trying. And what will happen to them? Perhaps socialism will increase as a effect of this. People think, why should James have all the money? I should have some. Please, let's equalize James. We take the money from James and give it to everyone else. The problem then is that maybe James doesn't want to be equalized, and that's like what happened in this. This is not a new idea. Like the idea to take some money from the capitalist and distribute it to the people, it's not a new idea. It has been tried many times. And the problem is that the person that you're taking the money from generally doesn't like it. So they try to go away. They try to, climb over the Berlin Wall or something like that to get to the other side, or escape North Korea or something like that. They don't want to be equalized. And then you have to make a very hard, to stop that in a very hard way. And it's not a good society either. So what will happen with society, I don't know. But I do know that you have to start accumulating assets. And
exactly.
Yeah.
It's the change that's coming is going to be very radical. It's going to disrupt everything. That's a wrap. We try to keep it to an hour. We've gone a little bit over. And final closing thought, real fast, 20 seconds each. Marty, week ahead, what do we have?
Yeah, well, I mean, in crypto in general, I think those that were going to sell crypto will take profits. Those that bought lower will sell, and that's happened. I think all longs with leverage will get liquidated. All the participants that have been waiting, big banks and financial institutions, will demand lower entries, and they'll get them. So this is all to be expected. At the end of the day, I think everything is perfectly as it should be. I don't see any weirdnesses. I mean, honestly, we're at the same price as we were in the beginning of the year, and it's been a bear market. So what did you expect? Well, it's all changing, guys. Everything changes. They start to print more money. When they start to print more money, people will front run that. It'll happen very fast. A lot of people will get caught out of the trade the same way they didn't sell the top. They won't buy the bottom. And nothing has fundamentally changed. It's only got better in crypto. The technology there's no other better way to store liquidity or to interact with money flow and ownership than crypto ever invented in the history of mankind. And it will be used. It will be the way we use it, and it's happening in front of your eyes. So don't be afraid of it.
Yeah, a little bit of bad breaking news here. Big earthquake in Japan. Hope everybody is.
Oh no, 7.6. Wow,
that's very big. It's bigger than Fukushima, if I remember.
Wow.
Rob, final thought from you for the week.
Prayers to the people in Japan. And lastly, is if you're here, you're smart enough to figure it out. Just go with your gut.
Yeah, and there's an old Swiss expression that you have to embrace the worry. Grip the worry. Don't run away from AI. Embrace it, or else you'll be blindsided. CTO, thoughts for the week?
Yeah, I mean, hope people are okay in Japan. That's bad news. And yeah, let's we just grind on, try to react to what happens, guys, and we keep an open mind.
Yeah, exactly. Well, thank you, everyone. Once again, links below for this team of legends. Listen to them all. They all have very
thanks for having us,
value to add. If you had tap into the Neuralink of all these brains, you'd do very well for yourself. But there might be some conflict every now and again too with how people think, and that's what makes the show. Thank you, Rob. Thank you, CTO. Thank you, Marty. You gents have a great week. And thank you to the moderators in the chat and everybody else for being here too. DBF, AR Ron, Zeno, Psych Experience, and Recluse. Man, you guys are all legends. TND, K8, Sean D. Thank you. Good night, everybody.
Good night. Good morning.